your points or so. Nigel.
All right. Let's get straight to our next corporate. Then TTK Prestige, that's the next corporate we are speaking to. There are widespread expectations for consumer durables that while margin could improve owing to lower raw material costs, particularly in the second half of the year. But to get a sense about how things are shaping up and discuss festive demand and the outlook, we're joined by Mr. T Jagannathan, the chairman of the company. Hi, Mr. Jagannathan. Thanks so much for joining in, sir. Always good hearing your thoughts. So let's get straight to the point. How has the festive season kick-started? And if you want to compare it with the pre-COVID period, that'll be 2019, could you tell us how much better is it? I'm assuming it's better, but how much better?
About 80%.
Oh, all right. So that's that's a big number.
80%.
You're saying from 2019, right?
Yeah. Yes.
Okay.
Yeah, about 80%.
Okay. So that's a big move.
That's almost a doubler, sir. Right? That's huge.
Yes.
Is it just for you, or is it is it? I mean, how much better are you doing in comparison to the industry?
I don't have that data.
Okay, so this is 80% growth compared to pre-COVID levels in 2019. Can you give us how the sales in Navratri, the early Diwali days, how did that look?
Actually, the sales have been very strong.
Okay.
But last year we had a fantastic year because of pent-up demand. And we had our best ever quarter, second quarter last year. This year we'll match that or grow a little bit on that.
Okay, so then actually, if last year was so good on a high base, how much better is 2022 in comparison to 2021? Or just as festive?
In the single digits.
Single digit, okay, but it's better. Got it.
But the half year will be very, very good because the first quarter we grew by 71%.
Okay.
Mr. Jagannathan, sorry, just to we had your CEO with us more than a few weeks back, and he had at that point told us that sort of entry-level products, which are about 60% of your overall sales there are stagnant. So when you tell us that things are looking very, very strong, this is value sales largely led by premium products, sir? Is that what is translating to this?
No, our entry-level products are not doing badly. But as Saurabh just said, and I heard him, it's the affluent who are buying, and they're buying the better products.
So that's more than making up for any underperformance in the entry-level segment?
Absolutely. Because their value is higher, the margins are higher.
Okay, so this premiumization is something that's working for you over the last many months. All right, got that. What about the e-commerce contribution? Are people buying more online, in the online channel compared to offline?
Actually, online has dropped compared to last year.
Okay.
People, now that COVID is over, people want to go touch feel, go to the retailer and spend time. And that's happening with the exception of the area between Delhi and Gorakhpur, which is completely flooded.
Okay. And you said that, the affluent are buying more, so perhaps, the premium products are selling more than the entry-level products. Is that making it easier for you to pass on the price hikes, any of the pent-up raw material price hikes that you perhaps had to pass on, and any more on the anvil?
You heard Saurabh again, the raw material prices have actually dropped.
Yes.
So I don't think there's going to be any price hikes in the near future.
And in quarter two, I don't think there was any price increase, right? You said quarter one there was, but in quarter two, you're looking to maintain status quo. Have you done that, or have you?
Correct.
So no price increase. Okay. All right. And Mr. Jagannathan, just to confirm, online sales is around 12% of your total mix, right?
That is correct. It still is.
Okay. All right. Rural market, how is that doing? If you could tell us, and as a percentage of your sales, how much is it?
5%.
Oh, okay.
Mr. Jagannathan, sorry, you said the region, because North is now a substantial, you're not South, only a South company. I mean, I think North is also a substantial portion of your sales. And you said the region between Delhi and, you said it's flooded?
Gorakhpur, yeah, Delhi and Gorakhpur.
Okay. Is that a big market sort of for you?
For Diwali, that's the biggest market for us because Diwali is a big thing in the North. So it's not so in the South.
So is that impacting what you may be able to do during this period?
We're hoping that it will pick up this week after the floods recede.
Okay. So October so far has been, I'm assuming, it's taken a bit of a knock there because it's a big...
It has. That region has.
Okay, that's interesting. the other one is your subsidiary in UK. I remember last time we spoke, you'd said things are a mess there, and it's only gotten messier with no real end in sight. What do you plan to do there in UK, sir?
Well, we're revamping the company, and we actually had a good September, considering all the disaster that UK is going through. And I think we'll manage to get out of it.
Revamping in what way? I mean, any details?
We are for instance, instead of selling to retailers, we're now going direct to consumer.
Okay.
Okay.
And that's improved margins.
Okay.
Oh, in fact, that was my next question. I mean, you're doing a lot to improve your margins and on its own as well, right? I mean, raw material prices are cooling off, demand is picking up, so there's operating leverage there. Can your margins pick up significantly in the second half? If yes, what would the average be?
Significant is a word I don't understand.
So you're at almost 14% now. You want to give us some specific numbers on how much you could take it to?
It'll probably be 15-16%. I can't predict it.
Okay. 15,
But
16%.
for a year, I think we'll be 15+%.
That's by the end of FY23.
That's correct.
And are there any more margin levers that you could sort of execute in the next year as well?
We have to wait and see what happens to raw material prices.
Okay, you were telling us that double-digit growth is something you're looking at for this year on the whole.
Yes.
You're maintaining that, right? Around 3,200 crores should be the year end?
That's about it.
Okay, all right. Also, if you could tell us a little bit more, Mr. Jagannathan, about your exports. Currently, I think it's only around 5 to 6% of your total revenue mix. But there's a big opportunity that's coming up, right? Because people are going, the China plus one factor. So that could throw up a big opportunity.
It has. We have got new customers.
Yes.
And we're unable to fulfill them because we don't have the capacity.
Oh, so that's great news then from a business perspective. Say in the next, 3 to 4 years or do you see exports as a percentage of your revenues, or do you see that export number go to say 400-500 crores?
Easily.
Do you want to give us a number? Say in the next 4 years, what does your export number look like? I'm guessing currently it's 5-6% on 3,200 crores. Also, it's around 200 crores. So in the next 3-4 years, what does it go to?
500 crores at least.
At least 500 crores.
Okay, that's on the export front, right? That's good news. Any new products that you're going to be launching? I think in the grinding appliances segment, you had new products. You introduced 25 new SKUs last quarter. What's on the anvil?
I can't tell you.
You can give us some. You can give us some indication.
Sonia, you're speaking to a client.
Okay, but at least tell us if there's some potential, that you're looking at.
Sorry, repeat that?
Is there any potential in newer areas for you? Something that you're working on the drawing board, perhaps?
Oh, lots. Gas stoves, mixer grinders, induction cooktop, pressure cookers. We've recently launched a pressure cooker called Flip-On, which is doing extremely well.
Okay, and you're sitting on free cash of almost about 600 crores. How do you plan to put that to use?
We're waiting for that good acquisition to come around.
Oh, anything that you're looking at closely?
We're trying. We're talking to a lot of people. We're trying.
Anything in this calendar year or this fiscal year itself?
I don't think so.
Okay. All right, Mr. Jagannathan, always a pleasure. It's like sort of a rapid fire, with you, and get to learn so much in such a short span of time. So sort of like an adrenaline rush for us as well. Pleasure speaking to you always, sir. Thanks a lot for joining in, and happy Diwali to you and your team.
To you too. Thank you.
Thanks a lot. Well, that's TTK Prestige, quite energetic and quite optimistic, right? They're looking to improve their margins, raw material prices have cooled off, and demand overall is looking very good. Let's do one thing. Let's slip into a quick break. We'll get you an exclusive conversation that we had with Kenneth Andrade of Old Bridge Capital Management on the Indian market.